Hello, from our previous series, we're looking at the smart money method of trading. And previously, we've looked at what an order block is all about. And we established that a bullish order block is the last bearish candle before the up movement, while the bearish order block is the last bullish candle before the downward movement. For instance, if you look at this market scenario, price has been bullish. This is an uptrend. And here, this last bearish candle here is our bullish order block. So if you follow it structurally, as the price keep progressing, you realize that here too, we have another bearish candle. So this large bearish candle before all of this move is our order block. So today we are looking at the smart money fair value gap. You can call it fair value gap, some call it imbalance, others call it improper price action. Regardless of what you are calling it, what matters is the understanding of the concept. I will not be going into explaining how you can identify the fair value gap in this video. If this is your first time of hearing about fair value gap, I will advise you to go to the videos on this channel where I have taken time to explain how you can identify a fair value gap, and we'll be looking at how you can trade it and take advantage of it in this particular video. Thank you so much. We've just hit a 1,000 subscriber this week, and I'm very grateful. Thank you for your love, thank you for your support, and you are coming across this video for the first time. What are you waiting for? Click on the subscription button, subscribe to the channel, turn on your notification bell so you'll be the first to get notified when we upload our next video. And also you can do well to share this video with your loved ones and other fellow traders. Now, price is an uptrend. What is the importance of the fair value gap? One of the characteristics of a valid order block is a fair value gap. For instance, this is an order block. And when I said an order block, I am referring to this is an uptrend. So in this scenario, we are saying the last bullish candle and this bearish candle you are seeing here now is the last bearish candle before this movement that went to the upside. So this candle, this last bearish candle, is termed as order block. Alright, there is a video on this channel as well. You can watch it to understand extensively what an order block is all about. So I've marked out my order block. Alright, so all of these zones you are seeing here are the zones of the order block that I have marked. Now, one of the things that validates a valid order block is the smart money cube. So for you to mark an order block, after identifying your order block, it is important you identify if at all there is an imbalance immediately after that order block. So looking at this here on this particular bullish candle, this is an imbalance. So the space left between here and here is what we are now referring to as the imbalance. So we have an imbalance, which means that this order block is actually a valid order block. Among other requirements, also a liquidity sweep is a confirmation of a valid order block, and here this price have taken liquidity, which means that this order block is actually a valid order block. So what are we looking at in this video? Now we are looking at how we can trade this order block, this fair value gap, which is also called improper price action, as a smart money concept trader. So now that we have done this, let's look at it carefully. You realize that this, I want to mark the imbalance now. So here is the imbalance. Okay, so all of this zone on this candle is the imbalance, so you extend it into the future. Alright, So once this is done, what is the next thing? You will now go to your lower time frame, because when price gave you this imbalance, you now go for your lower time frame and wait for price that has gone up to retrace, to fill into this space of this imbalance. Because as we rightfully said, imbalance is an improper price action, which means that the price is not supposed to move leaving an imbalance. It's not supposed to move leaving a gap, and as such price will always reverse to fill in that gap. So that is why we are looking at this. So in this scenario now, price left, you can see that price came to fill in this gap and then before continuing to the upside. So for you to trade this now, you can now move to your 1 hour time frame. So let's look at the place where we marked. Now you can see that this imbalance as well reproduces itself on our 1 hour time frame. So if you look at this 1 hour too, we have an imbalance on the 1 hour. So look at what happened. Price reverses. At times price will fill 50% of the imbalance, okay, and then reverses back. But there are scenario where price will fill the complete zone of the imbalance, and in other scenario it will fill only 50% of the imbalance. So in this scenario I'm trying to see, let's look at what percentage of the imbalance was filled. Alright, beautifully well, here price filled 50% of the imbalance, and that is exactly what we're talking about. So look at what happened here. Now price reverses into the imbalance. After price went up, price pulled back into this imbalance. Alright, so what do? You are looking for an entry confirmation trigger, and if you look at this carefully, you realize that we are having a divergence here. Now price is giving us a lower low, but look at our indicator window. Our indicator window is giving us a lower high. So this imbalance, this divergence also is our additional tool for confirmation. Alright, and remember, on our 1 hour time frame we use either the engulfing candle or the pin bar for our entry. So as you can see, this is a divergence. The indicator window is doing opposite of what the main chart is doing, and afterwards look at this, we have this bullish engulfing candle, and that becomes your entry. You can as well use your trend line for a validation. So if you have your trend line this way, and then you can see how price behave around it. So price did what? Price break out of the trend line, retest it, and then it continue to the upside. So depending on how suit you and how you want to make your entry, so you can see how that price plays out. I am very sorry that in this video I'll not be explaining, because I don't want this video to be long. I'll not be explaining how exactly you can figure out on your own, but watch the video on this channel, go through it, and then you will see where we talk of how you can identify imbalance. Here again, this is 4 hour time frame, and here is another imbalance. So what I am marking out now is an imbalance. Remember, this imbalance is just on this candle, right? It's just on this candle, but since price has not filled into that imbalance, I will continue to extend the imbalance zone into the future until any day or any time price chooses to come back and refill the imbalance. That's just what is happening. Otherwise, this is the candle under consideration. This particular bullish candle is the candle with the imbalance, and this imbalance on this candle now, this particular bullish candle, is what I have marked out. Okay, so initially your imbalance will be here, the zone you marked will be here, but looking at it, price has not retested, so you keep extending it into the future until price come into that zone. And look at what happened here. Now price has filled 100% of this imbalance. And if you look at what I have been saying, look at this carefully, you realize that this is a divergence. This is a divergence, and then here this is a divergence on a 4-hour time frame. So let's go to a 1-hour time frame and see how we can find this entry. Okay, this is the first one that we had. So you can see now price came into this imbalance proper. Look at price coming down. Look at what our indicator window is doing. Indicator window is making a higher low while price is doing a lower low, and from there you have this bullish candle and you are into this trade. If you didn't make the entry there, here is another opportunity for you to be in this buy trade. And of course, if you want to put your trend line, the choice is all yours. You can have your trend line being drawn this way as an additional tool for your confirmation, maybe for your second entry. You can have your trend line this way, and then you can see the price break out of it, retest, and it went, and afterwards later in the future again price came back into this zone, and from here we have a pin bar, and you can see how price has been pushing. So this is not just a theory, this is something that is very much effective and it is working. I will encourage you to please backtest. First of all, learn how to identify imbalance. Once you have done that, your job is 50% done, because imbalance will form part of your point of interest. This is 1 hour. Do we have an imbalance on this 1 hour? Yes. Although this imbalance is not reflecting on a 4-hour time frame, but here I'm trying to tell that this is an imbalance. So there's a tendency that later in the future, this price will pull back to fill into this imbalance and then continue to the upside. So imbalance is part of your point of interest, same as order block. And we have said it that one of the confirmation of a valid order block is an imbalance. And if you have followed this channel over time, you realize that we've talked about how we can use our Fibonacci retracement tool to determine our entry. So price must not only come to your order block before making your entry. You can make your entry from your fair value gap. Alright, so for the purpose of this video, I'll be stopping here. In the subsequent video, I will be using the Fibonacci retracement tool to show you how you can buy high and sell low using just the Fibonacci retracement tool, and that will coincide with any of these point of interest that we have identified today. And in the subsequent video as well, we still have the smart money cube, the king's order block, that we need to identify as our point of interest. So the goal of all of this is to time our entry and make us a successful trader. However, go and do your homework, backtest, and watch previous video on fair value gap. Thank you for watching, and if you are interested in our training course, there is a link in the description of this video that will lead you to a Telegram group where you can make an inquiry. Thank you, and see you in the subsequent video.